Ladies and gentlemen, good day and welcome to the Q2 and H1FY26 conference call of Pricol Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Pricol Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the second quarter and first half of the financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Vikram Mohan, Managing Director, Mr. P.M. Ganesh, Chief Executive Officer and Executive Director, Mr. Siddharth Manoharan, Director of Strategy, Mr. Priyadarshi Bastia, Chief Financial Officer. Without any delay, I request Mr. Vikram Mohan to start with his opening remarks. Thank you and over to you, sir.
Welcome, namaskar, vanakkam. To the H1 earnings call of Pricol for the financial year 2020, ending 31st March 2026. I hope all of you had a good festive season and had a good time with all of your family. I hope all of you did see the presentation that has been uploaded. I'll give you a very quick synopsis of the same and then we'll move to the questions. I'm sure a lot of you have questions to ask us. We are overall pleased to deliver a good set of numbers for the first half of the year and the second quarter of the year. Our revenue from operations on a consolidated basis stands at around 988 crores with an EBITDA of 123.35 crores, thereby giving an EBITDA margin of 12.49%, a PAT of 64 crores, PAT margin of 6.5%, with an EPS of 5.25 rupees per share for the quarter. And for the half year, revenue from operations of 1,865.59 crores with an EBITDA of 225 crores, EBITDA margin of 12.07%, PAT of 113.88 crores, PAT margin of 6.1% with an EPS of 9.34 rupees per share, which has seen a significant increase from H1 of the prior period and the Q2 of the prior period on a year-on-year basis. On a consolidated basis for the quarter, our revenue from operations has grown significantly by 52%, both organically and inorganically. This has been abetted by the acquisition of the new company, which is in the name and style of Pricol Precision Products Limited, the injection molding division of Sundaram Auto that we had acquired, and our own very healthy growth has resulted in this 52% growth. Also a 41.59% EBITDA growth. You may feel, why has the EBITDA growth been a little lower than the revenue growth? It is because of the consolidation of the plastics business that we acquired at a lower EBITDA and slowly and steadily improving the EBITDA of that business. Our revenue from operations for the first half has grown by 48.89% and EBITDA by 34.24% compared to the same period in the prior year. I do hope the set of numbers and any other questions related to this we will answer in the call, in the question and answer session going forward. May I request all participants to restrict themselves to one question to allow other people to have a chance to ask their questions. If they have more than one question, request them to join the queue again. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vijay Pandey from Nuvama. Please go ahead.
Hi, sir. Thank you for taking my questions and congratulations for an excellent quarter. First, a couple of housekeeping questions. Just can you tell us what was the revenue above from Pricol Precision and what is the EBITDA margin from there?
I'll request our CFO to answer the specific question. But EBITDA margin when we took over the company was at around 6.3% in March of this year. And it's been steadily growing month on month with the actions that we have been taking and has hit a number of about 9.5% in the month of September, which we hope to maintain and sustain in the months forward and a marginal improvement on that. So it's been a steady improvement. We've been having 0.5% or so EBITDA improvement every month since we've taken over with all the restructuring activities that we have planned. With regard to revenue and EBITDA for the H1, Priyan, I'd request you to give the exact numbers.
Good evening. For Q2, the revenue was 235 crores with an EBITDA of 9.08%. Thank you.
Okay. Secondly, sir, as we now look forward, we expected that there will be some production issues from where in Q2. Has that transpired? And are you seeing what are the level of orders you are seeing now in the Q3, especially with festive season and going forward over next 2 months? So if that you can help us, that will be helpful.
Yeah. So there's 3 issues distinctly that you're talking about. What we alluded to in the last call was a rare earth magnet crisis, which was affecting the automotive industry as a whole. I think that crisis has largely passed, and we have been able to manage it very well, ably led by our CEO. We've been able to tide over that crisis, and we've been able to meet the numbers. And yes, festive season demand is over. Always Q3 in the automotive industry is the weakest quarter in the year, and we will be aligned with that. Automotive industry never does Q2 level of performance in Q3 historically, and this year is going to be no different. But having said so, I don't know how many of you are aware, there is a bigger crisis that has hit the auto industry, which is the semiconductor crisis caused by one company called Nexperia, right? So this is not just restricted to Pricol. It has affected the whole industry. About 80-90 semiconductor parts meant for automotive is gone out of production, where they have raised their hands. So many of the automakers and the tier ones like Pricol are affected. This, we believe, will have some degree of impact on the industry this quarter, in addition to the overall low demand this quarter. How much? We don't know. Will the sales drop significantly compared to our original plan? No, it will not be significant. I'm quite confident we'll be able to ably manage it because we have found alternate sources, tested alternate parts, given it to the customer for validation. There could be some delays of revenue by 2-3 weeks, but we will not lose the revenue. But Will we exceed our internal targets? Probably no. We'll probably meet our internal targets or be short of it by 4-5%. That's the status for this quarter. I will not be able to comment more, or neither will our CEO be able to comment more, because the situation is unfolding as it speaks, not just for Pricol, but for the entire automotive industry.
Oh, okay, sir. Okay. I'll call back in.
Thank you. Thank you, Mr. Vijay.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address all questions from all participants, I kindly request everyone to limit your questions to 2 per participant. Participants who wish to ask a question may press star and 1 at this time. The next question is from the line of Nishita Sanklesha from Sapphire Capital. Please go ahead.
Yes, hello. Yeah,
yes,
so I just
had
a few questions. I wanted to understand about your capex plans. What is the total amount of capex that you've done in FY26, and what is the capex plans for FY27?
This year we will be doing about 250 crores of capex, and we're again beginning to start another capex cycle. Because of the acquisition of the new business and a lot of the new business opportunities, the switches business that we have signed a new technology license agreement for. So we're going to be creating capacities for many of those businesses. We have won a lot of new business in the SPM space, the disc brake space. So we are again getting into a capex cycle and also buying some land for expansion of the company. This year it will be somewhere in the region of 250 to 300 crores, and next year would be a very similar number.
Okay, understood. Also, your depreciation has been increasing quarter on quarter. In this H1, it's increased. So can you give me a reason for that?
Yeah, we are continuously investing in new machinery, modernization, debottlenecking production lines. So we've been on a heavy capex mode in the last 2 years itself. So as a result, our depreciation is going to keep increasing going forward. As we evolve from being a mechanical to an electromechanical to an electronics company, and now in the plastics business also undertaking expansion and modernization, the more the capex, the more the depreciation, and that's going to continue. That's going to be the trend for the next 3 years.
Okay, and would you like to give any guidance?
Ma'am, the next question, can I request you to join the queue, please? So that there are others in the queue waiting. Thank you.
Yes, sure. Yes.
Thank you very much. The next question is from the line of Ashwin Patel from LKP Securities. Please go ahead.
Yes, sir. Thank you for giving me this opportunity, and congratulations on a great set of numbers. My question is on P3L business. Just wanted to know the business outlook for this business going forward, like in medium and long term, and also on the margin front, how much expansion do we see in the margins going forward, and also the order wins we would be seeing, or the client wins which we have seen in this quarter, and going forward, how are we planning to expand our clientele going forward? Thank you.
Okay, that's 4 questions bundled into one. Yes, we took over a business with about a 6.5% EBITDA. We've grown it to about 9.5%. I think par for the course for this business would be about 10 to 10.5%, which we will hit over the next quarter or 2. In terms of margins, will there be scope to expand beyond that? At this point in time, no. Is there going to be a huge amount of growth in the next 2 years? The answer again is going to be no. It is going to be a reasonable amount of growth of between 11 to 15% because we need to create capacities. So we are in the process of buying land and creating more plants and putting in new machinery, etc. So there's a very healthy pipeline of RFQs and orders, but we are unable to convert it to business because of lack of real estate, which we are now working on. But having said that, I'm very confident that we will be able to deliver 11 to 14% year-on-year or 15% year-on-year growth for the next year and a half. Thereafter, accelerated growth with the capacities being enhanced. It was a very TVS-dependent business when we took it over. We have now increased our business. We have won a lot of business from other We have won business from Hanon. We have won business from Autoliv. We have won business from Schneider. We are now in active talks with Hero, Honda and Bajaj and Tata Motors, where we are in the final stages of getting business awarded. So it is going to change the landscape of the business quite significantly in the next 2 years as we add more customers, add more capacity, and add more plants to the company.
Okay, sir. So thanks a lot. And just if I could squeeze one more question, please, sir.
Can we go back to the next person, sir, and we'll come back to you.
Okay, sir. Thanks a lot. No problem.
Thank you very much. Participants, kindly limit your questions to 2 per participant. The next question is from the line of Vijay Pandey from Nuvama. Please go ahead.
Thank you, sir. Thank you for allowing a follow-up question. So, 2 questions. One on our dividend plan. So, this is the first time we have announced dividend. I just wanted to understand what is our dividend payout policy expected to be. Will it be like, should we expect another 2 rupees in the second half of this year, or will it be like 2 only for the entire full year?
Vijay, this would be for the entire full year. We had planned it actually for the year ending FY25, but because the semiconductor crisis was hitting, we didn't know what is going to be the degree of the rare earth magnet crisis. We thought there was a lot of doomsday predictions. So we had deferred it by a quarter to see how we are able to tide it over, and then we paid out this dividend.
Okay. Second,
undertaking a heavy capex cycle again, I think it's prudent to put money back into the business and create wealth for our shareholders than go through the dividend route, which I don't think is very financially good returns for our shareholders because of the taxation involved.
Okay, that's very helpful, and that confirms our view. That's a big. Can you just speak a little bit about the disc brake business and how is this coming up? What is the
Pardon me, Vijay, can you repeat again?
The
disc brake business, how is it coming up? We've started production. I'll request our CEO to throw some more light about the disc brake business.
Disc brake has gone into productionization about 6 months back. First, we have started with the new age EVs, and also we have won a large business from the top 5 OEMs in the country. So that will go into productionization from Q1 of next year. So, and as you know that when ABS is becoming mandatory from January onwards, disc brake also will become like an equivalent mandatory to an ABS. So we find that the growth of disc brake is going to be quite good in the coming years. Thank you.
Just on the disc brake only,
so sorry to interrupt, but can you please rejoin the question queue?
It's just a continuation of the same question.
Please go ahead, Mr. Vijay.
Okay.
So that order is for which category of model? Will it be more than 200 cc or less in the new range? And how do you see the government regulation? Because a couple of competitors have said that mandate is not going to come. I just want to see your understanding on that.
So the government, the mandate has come as that all, irrespective of the CC, ABS would be mandatory. That is what the regulation says from January onwards. So irrespective of the CC, currently 150 cc and above has got ABS. Now irrespective of the CC, all vehicles will have ABS. So if you have to implement ABS, disc brake is also mandatory to have it.
Okay.
So that is why we find that the disc brake requirement will be high. Yes.
And our orders for the 150 cc and above, or?
Sir, I think we have a lot of people on the queue. I think we are going too deep into one product category, into a vehicle category. I think we should give an opportunity for the others. Thank you, Mr. Vijay.
Thank you.
Thank you very much. The next question is from the line of Nishita Sanklesha from Sapphire Capital. Please go ahead.
Yes. Hello. So it's a follow-up question on the capex only. You mentioned that in FY27 also we will do 250 to 300 crores of capex. So is that going to be the acquired business or for our business only? And if you could also...
Both.
Okay, so it's going to be for the both. And you mentioned that for the acquired business, we are in the process of looking for land and then build a plant. So, have we already bought a land, or what's the progress on that?
We are in the final progress of completing the land purchases. It should be completed in the next 45 days or so. We're on so all legal due diligence is completed, and in fact, we are drawing up plans to even start construction of the plants.
Okay, understood. And
Thank you very much. The next question is from the line of Shubham Batra from Ambit Asset Management. Please go ahead.
Hi, sir. Thanks for taking my question. Congratulations on a good set of numbers. Couple of questions on the new order wins that we had indicated in the last quarter. We indicated we got an order from Yamaha and Honda. Could you give us an update on, is it on track, and when do we start seeing revenue from it? Secondly, anything that you could add on to the handlebar?
No. One question at a time. I think people are bundling in too many questions. What are the new order wins in the last quarter? Ganesh, what are the new order wins in the last quarter? Any new order win in our DICBS division or ACFMS division from the LOI to SOP, start of production, is always about a 24-month lead time. So that's a generic answer for most of our things. Plastics is more like 6 to 8 months. Ganesh, what are the significant new order wins for the last quarter?
Last quarter, you could have seen that you asked specifically for Honda and Yamaha, right? I think that was your question.
Right, sir.
Okay. Honda, that we have already gone into mass production in the last 2 quarters for their motorcycle model, where our instruments are being used. Secondly, the new EV vehicle launch by Honda, we supply the speedometers to them. Both the models actually already have gone into the ramping up stage, and we are working with Honda for much more models in the future to come. Yamaha actually has made some kind of initial discussion with us, and we have also got some requirement from Yamaha, which we are trying to convert into a business.
They have also completed the audit and certified our facilities. So they've completed the audit of the plant, certified us, and now engaged in commercial discussions. And LOI is not received as yet, is under discussion.
Got it, sir. Thank you.
Thank you very much. The next question is from the line of Aman Agarwal from Carnelian Capital. Please go ahead. Mr. Aman Agarwal, please go ahead.
Can we move to the next person in the queue, please, ma'am?
Sure, sir. The next question is from the line of Madhav Agarwal from Emerge Capital. Please go ahead.
Audible. Thank you for giving me the opportunity. Sir, for our product verticals, the 3 verticals, DIS, actuation systems, and precision products, just wanted to understand what is the current share of revenue between the 3 and the margin profile, and also what is the target share that we are hoping to achieve between the 3.
This year, the plastics, the polymer business will be about 850 to 900 crores with a steady state margin of 9.5%. Of course, we started the year with a much lower margin because we had just acquired the business, and a steady state margin of about 9.5%. The ACFMS division is going to go through a very steep growth curve in the next 36 months because of acquisition of new customers and new product verticals. We are going to be seeing about 30 to 35% growth year on year, or perhaps even higher in the next 2 to 3 years. and that is at about 600 crores. And the DICBS vertical will be at around 2100 to 2200 crores, and the margin is likely to be at around 12.5%. Correct me if I'm wrong, Ganesh. Sure.
Okay. Thank you for that, sir. Just wanted to know if the mix between these three divisions, any change in the mix that you see going forward?
So, like I mentioned to an earlier participant, we will see 11 to 15% growth for our polymer division till we add capacities, and then we will see a much higher growth rate. ACFMS will see a growth of about 30-35% in the next 2 to 3 years. We aspire to grow. The DICBS division will maintain a steady state growth of about 15%.
Understood, sir. Thank you so much.
Thank you.
Thank you very much. The next question is from the line of Vipul Kumar Anupchand Shah from Sumangal Investments. Please go ahead.
Yeah. My question has been answered. Thank you.
Thank you, Mr. Shah.
Thank you very much. The next question is from the line of Chaitanya Hardikar from Purnartha Investment Advisors Private Limited. Please go ahead.
Yeah. So, hello. Thank you for giving me the opportunity. I just wanted to ask one question. If I'm not wrong, we had set a target of around 8,000 crores of annual revenue by FY30. And what I have understood from your earlier answers is that we are planning around 500 crores of capex over the next 2 years. So just to know if that capex will be sufficient to reach the target, or planning some more capex or some inorganic opportunities as well?
No, this capex is not going to be sufficient to meet that. Capex will be an ongoing affair as and when we acquire businesses and create capacity. So we have carved out a balance sheet all the way till and it's not FY30, it's December 30, which is FY31, is 8,000 crores. Okay. And capex will be an ongoing item because there is a sustenance capex of 120 to 150 crores that has to be done every year. It's not that there will be zero capex after that.
Okay, so can you just give me a little bit of guidance about how that capex would be around? Just a broad estimate.
I think I've given an estimate for this year and next year. It will, as it evolves, the capex will happen. But I don't remember. We have projected a 5-year balance sheet. I'm not able to remember from memory what exactly is going to be our capex for the next 5 years. I'm sorry.
Okay, got it. Thank you, sir.
Thank you very much. The next question is from the line of Nishita Shanklesha from Sapphire Capital. Please go ahead.
Yes. Hello. So I just have 2 more questions. One is on what is the current capacity and its utilization for both the business and the guidance for FY26, FY27 and sustainable margin. These are my 2 questions. Thank you.
Margins I already spoke about, ma'am, to an earlier person in the question in the Q&A, so I'm not going to repeat that. In terms of capacity utilization for the polymer business, it's closer to 94-95% today, which is why we are enhancing capacities. Once we enhance capacities for the DICBS division, which will happen over the next 2 quarters, which is a work in progress, then our capacity utilization will come down to about 70%, so that we have capacity for more growth in that division. In the ACFMS, it's currently at around 80-85%, and additional capacities are being created.
Okay. Thank you so much.
Thank you very much. The next question is from the line of Meenu, an individual investor. Please go ahead.
Hello, am I audible?
Yes, ma'am. Good evening. Okay.
I just wanted to know your tentative for the...
Ma'am, we have lost your voice. Ma'am, we are not able to hear you.
Ma'am, can you please speak louder?
Hello?
Yes, ma'am, we can hear you now.
Yes. So, sir, can you give me guidance on tentative EBITDA of your cluster business?
Tentative EBITDA of?
Cluster business.
I don't want to be giving future-looking numbers. I've already given what the run rate is and what we hope to maintain, ma'am. I don't want to give forward-looking statements, ma'am.
And sir, Can you give me guidance on the growth of Pricol, like the current growth of Pricol and growth from the
I just answered that to another investor just now. Each division, what EBITDA and what growth rates we are expected to maintain, ma'am.
The line for the participant is disconnected. The next question is from the line of Ashwin Patil from LKP Securities. Please go ahead.
Yeah, hi. Thank you for taking my follow-up question. This question is on ACFMS that we have just said that, we are expecting about 30 to 35% kind of growth in this business going forward. So what would be the composition from where all this business, we are expecting to come from? Hello?
Oh, I'm sorry. My speaker was off. I'm sorry, sir. The first wave of growth will come from FPM, second wave of growth from disc brake, the third wave of growth from the switches.
Okay. So over a period of 1.5 years, what period or the duration we would be expecting this kind of?
The switches will be 2 years later. Disc brake growth will happen from 18 to 24 months. FPM is as we speak.
Okay, sir. Thanks a lot.
Thank you very much. The next question is from the line of Smith Shah from Monarch Networth Capital Limited. Please go ahead.
Thank you for taking my question. Congratulations on a good set of numbers. So my question is regarding two collaborations that we have done. One is the tech license agreement for handlebar, and the other is with UE for optical bonding. What is the progress on the same, the tentative capex that will be required for the same, and by when can we expect the revenues to start?
Thank you for your note of congratulations, Mr. Shah. Let me correct you, it's not for the handlebar. It's products on the handlebar. So handlebar per se is just a metal form product. It's primarily for the switches and the throttle. In fact, we have just had the first engineering workshop and with our, and it's not a JV it's a technology license agreement, TLA, right? So we are going to start the roadshow to the customers with two customers have already our anchor customers. They are the ones who actually identified the partner and asked us to go forward with them, two large customers, OEMs in India. They will be our anchor customers. Next, in 2 weeks' time, we are starting our roadshow with our partners to not just those two customers, but a whole host of other customers. Revenues are about at least 24 months away because it's a completely new vertical. That's what I answered to the gentleman, Mr. Ashwin Patel in the earlier, because it now has to get converted to a product into testing and revenue, so we are talking of about 24 months away. With regard to POE, it is for a backward integration to do the optical bonding and screen manufacturing. That way we make it a little more Atmanirbhar Bharat as per our PM statement, and we reduce our import dependence. And we are also able to get some cost arbitrage because we then get into also the screen, because there are three important components of instrument cluster, which is all the plastics, which we do, all the PCBs, which we do, and third is the screen, the most expensive part for the touch screen, which is where we are going into. We are just constructing the premises for the same, and we have concluded on the entire project cost. It will be spent over the next 9 months and productionized. Is it going to give any revenue? No, because it's a backward integration project to make it more self-reliant and to give us cost arbitrage. Because our major competitors are backward integrating also. So if we do not backward integrate, we will not have a cost arbitrage. So it is not going to be a revenue earning technology license agreement. It is to strengthen our business and our offerings to our customers and reduce our import dependence.
Okay. Thank you for answering.
Thank you very much. The next question is from the line of Saurabh Kachava from Indus General Insurance. Please go ahead.
Yeah, thank you for taking my question. So this question is regarding the newer verticals which we are willing to enter in. So in the last con call, we discussed about the smart e-cockpits and battery management systems being tested at your various customer places. So I wanted to understand how far has we reached in that, and any further visibility about that.
We have developed the product. We have showcased it in technology roadshows to our customers, and revenue potential we are yet to see, because now customers know that we are able to meet the cost, the quality, and have the technology. Now it has to slowly start translating into revenue. Is there any revenue visibility as we speak? The answer is no.
So would it be okay to assume that it would be a margin accretive business for us, as it is a pretty advanced thing?
Yes, it will be anything new. When we got into TFT for the first time 5 years ago, it was hugely margin accretive. Now slowly it is getting commoditized. So any new technology is slow to start off, and then till it picks up pace, it's margin accretive, then it gets commoditized.
Okay, sir. Thank you.
Thank you, Mr. Saurabh.
Thank you very much. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to management for closing comments.
Thank you very much, ladies and gentlemen, for your active participation in this call. We do hope that we are able to tide over the current crisis that has hit the automotive industry, which is the Nexperia crisis, which, of course, is way beyond our control, and we are ably navigating it under the leadership of our CEO and his management team. And we do hope that the impact of this crisis will be minimum, and we will be able to meet and exceed the investors' expectations in this quarter also. Look forward to connecting with you in the next call after the Q3 results are announced. Thank you. Have a good evening.
Thank you very much. On behalf of Pricol Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.